And for a lot of you who didn't realize, back in December, early December, European central banks set up a stimulus plan. So they were the first to come out in December suggesting doing a stimulus plan. So they got approval back around December 10th or before December 10th for $2 trillion in additional stimulus, which basically gave the central banks the ability to pay banks to lend money out. So basically, banks were being paid to actually physically lend money out. So basically, giving the money away for free. $2 trillion worth that was approved in December. And remember, it was late December before Pfizer came out with the first news of a vaccine. So, we've got this stimulus going into the economy out of Europe. Then we had that stimulus that we just got through having under Trump already hit the U.S. markets, and now we're talking about another 1.9 trillion here under Biden as he gets in. So all of this stimulus is unprecedented. We've never had anything like this. So you trying to short this, you're asking to get destroyed. I mean, it's a really dangerous situation here. Um, this gives you just a little bit of idea of some of the money supply. Some of the latest news is even higher than that. This doesn't even factor in the new stuff that Biden's trying to do, and I don't even think this chart even is fully factoring in the Trump level. This is a U.S. based chart here. It's not showing the what's going on in Europe as well. So we got all kinds of money here, right here at the end of the year, flooding the markets, and we haven't reported any earnings with all this new money supply entering the markets. And what it all comes down to, uh, we've had this little bit older chart, but basically the velocity in 2020 just crashed, and they're trying to increase the velocity of the M2 money supply, and by throwing a bunch more money out there, they're hoping they can get people off out there spending money, and we can kickstart this economy by getting people out there. But it's very inflationary what they're trying to do here, and it can lead a lot of troubles down the road. So just a few things that I'm seeing here in the markets. But basically, it makes it very, very difficult to short the markets, knowing that we're at pumping in so much liquidity into these markets. Um, a lot of liquidity tends to hide problems in the economy that a tighter money supply would bring out. And when you have liquidity the likes of which the world's never seen before, it's a very difficult situation to short uh, into. Okay, so it's still buy the dips until proven otherwise, in my opinion. Okay, this week kicks off five top companies in the world. Not all of them this week, some of them next week. But my point is that these are the five critical: Microsoft, Apple, Amazon, Alphabet, and Facebook. They combine make 20. This is a little bit older chart. I think it's even higher now. This was done back in May, so we're probably considerably higher on a percentage basis here because of the explosion in these stocks. But back then it was 24% of the S&Ps. I'm pretty sure it's a lot higher than that now. I'm thinking it's close to 40% of the S&Ps are just those five stocks now. I'm pretty sure that's what it is, and I think it's well over half on the Nasdaq. So basically, of the markets, uh, stock markets of the world, these are a breakdown of the exchanges. Okay, 31.5% of the global markets are all the NYSE. Okay, and we're looking at almost 40% of that is these five stocks. That gives you some idea of just how important these five stocks are for the health of global economy. And these are the five stocks, by far, without a doubt, the ones that will make or break this market higher or lower. So this is very important to realize going forward into this week. Tuesday, Microsoft reports. Wednesday, Apple reports. And I can't remember. Might even have another one later this week. I'll have to double check here. Let me go over here real quick. Apple, AMD, Microsoft, Facebook's reporting this week. So we got 3 of the 5 reporting this week. And here's my watch list right here for this week on the earnings and stuff. So basically, definitely stuff to remember here. I got the Netflix chart up, so I'll start with that one here. And some little comments that I don't want to make. They missed on earnings, technically, but yet they popped almost 17% at the close, even higher that intraday. And it's like, oh my Lord, what's going on? How did they miss? Well, they had this huge technical subscriber growth. And one thing about Netflix, they've done this in the past, and I don't know if it's the case, but they give a lot of free promotional memberships to the developing country nations, and like Malaysia and Vietnam and China, India, especially India. And after that membership runs out, and what they'll do with reporting their membership, they're putting those free accounts in that count, like the million new accounts they're saying, but they're not paying customers yet. So I don't know if that's the case again, but they've done it before. So definitely be concerned going forward here. Netflix could easily be a short, in my opinion, because they have proven to have that situation, and they tend to overpromise. I was wanting to see them to actually have a major change in their platform, where they were bringing in all different uh, revenue streams and stuff, and they really didn't do the stuff that I wanted them to do. They tried to hype up the stock by saying they're going to do buybacks, and they have a very expensive price to earnings multiple already, and so they just do it. They said everything they needed to say to prop up the prop the stock up, in my opinion, and we got this uber exuberance in the market for growth, you know, and it didn't take much for the shorts to get squeezed and squeezed hard. So definitely something to think about going forward here. Now I do have a theme. I don't have it proven yet, but I think that PC and laptop growth is going to be through the roof this year, or this, for the Christmas holiday season, as so many students are having to stay at home, and uh, PC sell. I mean, PCs were very expensive there, and you could. I mean, there was a laptop Chromebook that I bought last Christmas for around $120 from Walmart, and I gave it to my nephew for Christmas, and he turned around and sold that for over $400 on eBay after Christmas, and I was like, "Are you kidding me?" And I can't blame the kid. He sees an opportunity. You got to go after it. But it was a brand new Chromebook, so yeah, that gives you an idea. Technology that was a year old and it's still selling for triple what we paid for it last year. Tells me there's a very strong demand in that sector. So I'm thinking there's going to be a major increase in Microsoft license agreements in their numbers. Now I know that is not the only thing revenue stream they've got, but definitely something I do have on watch going forward into this quarter. One aspect of their business that's really gotten overlooked. That's their core backbone of their business. So definitely something I want to put out there. Just it looks like we've had a nice consolidation and it's preparing for a breakout, but you never know on these things. So just something to think about. And you can't compare it to IBM. IBM is just it's old tech, and the management just isn't very good. It's a Microsoft's a whole different beast versus IBM. So just a few things I do want to point there out on that stuff. Okay, I'm keeping an eye on Spy here. As you can see, these channels, we are now on this outside channel on the accelerated uptrend here. So now I'm starting to get really concerned here. This here, I think, is the responsive short zone. I think it needs more time. You know, charts, you need time and price, and that's the two aspects of it. And I think we're getting awfully expensive here on Spy. But definitely something I want to keep on watch going forward here. If I go down here on a, I don't know, let's try 1 hour. And some of my levels that I'm looking at here going into this week. So basically, we broke out. Here is my primary uh, trend high and into the new trend. And this up area up here has tended to reject up in this area. Okay, so this is a technical short area till it's proven otherwise, in my opinion. So we do have a breakout into a new trading zone, and if I bring her down in here, you can see it a little bit closer. I have been telling the guys I'm still looking for the 3900 on the SPY. We are in this, like I said, this upper trading zone right here. So 3900 is going to put us right up into this zone if that's the case. And it's and this is a major resistance area, a yearly resistance area for the S&Ps. So that's why I think that's where it's wanting to go up into this, if not a little bit higher. And then we'll actually up in this area, we'll probably see, uh, you know, possibly a bigger retrace potential at that point. Like I said, there is so much money flow entering the market. I mean, it's a very dangerous situation to be trying to fight all the liquidity being put into the market. Okay, got a little different color here for my cues. I got two. I got a larger ranges for the technical for the cues, and this is typically happen because you got higher at the higher alpha area of the market, so you have wider trading ranges generally in that scenario. And that gives you a little bit of idea. I'll go down here on the 1 hour here, give you a little bit closer look what we're doing here on the shorter time frames. Okay, this is the that weekly level high. Okay, that was our weekly level high. We completely breaking out of that weekly level high into even a higher trading zone, and we're holding right above a critical yearly uh, resistance area. So we had that rocket move on Netflix right above this yearly resistance area. So, if we start breaking this, just like Friday's lows, if we started breaking Friday's lows, then I really have to start looking for a short. But as long as we hold Friday's lows, I mean, the markets are still a long into the week. So, very bullish chart. Could be breaking out to exceptionally higher levels here. It's hard to tell. We are in a yearly blow off top area. I mean, seriously, we're up here on the very last line. Uh, here on the what is this? This 1 hour, so that's weekly. Yeah, so we're going to be starting next week. So uh, we pushed it as far as we could push it last week without really getting a blow off top. So that's why it stopped right here. That was our last line in the sand last week to stop it. And so very bullish coming into this week for the Qs. And like I said, we got uh, we got Microsoft, then Apple, then Facebook, all reporting this week, and I think Google and Amazon are next week. So definitely something to think about going forward here. And as you can see, IWM is just basically parabolic. I mean, it had that breakout. Let me give you a better look here. 10-year monthly, I guess. See, we were consolidating in this zone, and it just went vertical, straight up out of this breakout area on IWM. All this money supply is looking for a home in the small to mid cap names, rightfully or not. Everybody trying to get that growth scenario, and they might be really messing up here. So I don't know. Ever since we came out with the vaccine with Pfizer, the markets seem to think it is a game changer, and we're going to come out of this a lot faster than what we probably will. Uh, I think a year from now we'll still be wearing masks and going into places. So that's just me. I think the restrictions on masks are here to stay for some time, And quite frankly, in the healthcare industry, I think it's probably going to be that part way permanently. All staff in nursing homes and healthcare industry will probably be required to wear a mask from now on out. And that's probably should have been done a long time ago. So just a few things that I'm thinking about here. But yeah, we do have now a potential breakout scenario. My next yearly resistance is up here at 218.40 for the IWM. So definitely some things to look at here going forward. And so I do want to float that out there for you guys to be aware of that. Okay, another chart I wanted to share with you guys. Basically, we're right here. The bull, we had that breakdown back in 2019. Yeah. So, right there when the coronavirus hit, we had to break down the energy and energy sector. And so we're right here trying to go cross back up here to the bullish side. Basically, what's really been driving this, the hopes that all this stimulus is going to cause a bunch of inflation in the economy. And if they're thinking if you get enough money supply out there that it's going to be a major inflationary force, and crude oil is going to be a nice natural recipient. The biggest issue I have here in that scenario is unless Biden comes in and starts slashing leases on the Vulcan and the fracking, which he says he's not. He's just not going to allow issue more leases. Uh, uh, if he doesn't do that, we've got all that Iranian crude that it looks like it's going to be imminently allowed into the marketplace, and that could definitely be because once if they remove those sanctions, which I think is going to happen probably before the end of the month, we're going to start seeing a lot of sanctions lifted on Iran. That is going to be a major negative force for the global markets as Iranian oil starts flooding the markets. They've been selling their oil on the cheap, taking it inland to China, and for pennies on the dollar. And now all of a sudden they're going to be able to start getting closer to fair market value for their commodity, and that is going to, like I said, put some downward pressure on unless we have a massive uptick in demand. And I do not see that happening. I see stagflation happening this year. You cannot raise in the middle of a crisis like this minimum wage to $15 an hour when you have record unemployment. It's just it mind-boggling to me to do something like that. But that's what the administration wants to do. So what can I say? So some other things I'm looking at. Here's France. They're pretty much on lockdown, and it looks like France is trying to break out. We're getting back up to 2009. So yeah, look at this. We broke down in 2009 from this head, and with all this stimulus hitting the market, it looks like they're trying to go back up here and do a double tap on their 2009 highs, and I think it's going to happen. So definitely something to think about going around here. And some of the other European stocks are looking, things are looking the same. So I did want to give you that. And then also on your XLE, as you can see, your MACD looks like it's preparing for another move higher. So definitely some things I wanted to mention here. And yeah, like it looks like we might be getting a reset on our XLE for another move higher in our energy here in the not so distant future on the shorter time frames. If you go out on a weekly basis, if I can get it to show up here, you can definitely see that we are very sold off here. This here has been the primary trading zone for our energy sector, which has gotten completely decimated since the coronavirus outbreak. So this is definitely something that I want to keep on watch here. Um, really think we're coming back up here, testing the 53, 51. Very that could be a very bullish scenario to the IWM as well, if that were to come to fruition. Another one I got on watch here. That's your emerging markets. As the dollar keeps going lower, that's great for the emerging markets. All this stimulus and stuff is likely to keep a continued bid in the emerging markets. It looks to me like we're getting a breakout in our emerging markets. So I definitely want you guys to be aware. We've been going sideways for many years, and what's happened to us under Trump might just be starting for the emerging markets under a scenario that I'm putting out there. So I think the real opportunities potentially are in the Asian, European developing countries, and not necessarily in U.S. equities. That's what I'm seeing a long-term potential breakout. I mean, it's still a little early, but I definitely want you to be aware of what's going on there. That trend line right there, we've just got a few days above that. And, it really hasn't, we didn't actually get that rocket move out. So that is a little concerning. I wanted to see a rocket move breakout, and we didn't get that yet. So coming into Monday, we want to see a very strong Asia market. Uh, we got a lot of strength coming into this, and I want to see the continuation of that strength coming into tomorrow's session. If we're not getting that, then my thesis could be wrong on that scenario. So, definitely something I want to keep on watch here. As this, like I said, I do think we have the potential for a major breakout on our emerging markets. Okay, Apple, very strong even after hours on Apple. We have a breakout of all time highs on Apple underway here. I've been saying for a few weeks now, I expected 150 a share for Apple into earnings. So here we are, we're getting a breakout starting Friday, and after hours was very strong too. So I'm actually thinking Apple is going to be gapping up Monday morning. We'll see what happens, but I do still think I'm holding true to the 150 or better um, open on Apple or close on Apple before earnings. So that is a theory I'm putting out there just to definitely keep on watch here. And basically, there's somebody out there had a 195 target or something like that for Apple for this earnings season, with all the good news that's potential for the company this earnings season. I'm actually expecting a very good quarter for AMD as well. AMD's taking market share away from IBM. So AMD and Nvidia, I think, are the chief competitors to IBM, and really helping them out. The one take a problem because you do have the big buyout of Xilinx, and there was some bad news that came out a couple weeks ago on Xilinx, and there is a buyout in the works, and AMD's paying dearly for the company. So that is this is not one that I would try to trade to the long side under that scenario into earnings. GE is one of my favorites for the year. I think we're going to be in the $30 range at some point this year on GE. So definitely one to watch. I don't know if it's still too early. Typically, under a Democratic, especially an Obama era administration, GE does very well. They are designed for alternative energies, and they got hurt by Trump's policies. Okay, the biggest worry that I have for Facebook, and that is maybe potential forward, near-term forward ad revenue decline due to all of the social media drama uh, and companies not wanting to have the exposure on Facebook because of the political drama um caused by social media. So I that is one major concern. The earnings I think are going to be stellar. I just think that that's the big problem as forward ad revenue is probably going to get hit in the near term, in my opinion. Okay, one thing I do want to think about on Boeing. We've already had the short squeeze. We don't have it wound up with a really solid, great short. So you get that rocket move off the lows. And one thing that did happen a few weeks back, Amazon went and bought up a bunch of current airplanes sitting on the tarmac from one of the airlines, and these are really good planes, and they got them for like 50 cents on the dollar. And so I think I is going to have problems on booking new plane sales if you got a bunch of planes sitting on the tarmac that airlines now, since they took all these government dollars, can actually sell at a discount and still look good on the balance sheet. So that's something to think about here. You know, when you're taking all these free government dollars, now all of a sudden airlines can write down these aircraft and not actually show a massive loss on their balance sheets. I also want to talk about the credit card companies, Visa and MasterCard. These could be children going forward this week in the fact that there's no international transactions happening. You know, and that's where they really shine on their processing. That's where the money maker, cross border transactions, and no traveling going on right now. So that's not really not happening. So definitely something that is a red flag going into this week on the credit card companies, in my opinion. Another one that could really outperform, that's Texas Instrument. There is a major uh, glut for chips right now, automotive chips, and basically they just can't get them out there fast enough. And so they could be a very strong, could have had a very strong quarter, as they too may have not been able to keep up with the current demand for these chips for automobiles. So as you can see to my left there's my list of the top earnings that are hitting the tape this week. Okay, got some airlines in there, got some defense contractors in there, got some healthcare providers in there. We do have a some transports too. Let me show you that real quick on the transports. Okay, and for me to be bearish to markets, I really want to see the transports leading to the downside. And as you can see, we're breaking out. So that suggests to me that there's more potential upside than there is possible downside. That's one major theme that I look at, transports. And then the Baltic Dry Index, that is one of your crucial major leading indicators. We did start to see a little bit of weakness, but nothing of any major significance yet. But we do have all the stimulus hitting too. So definitely something to keep on watch here. That could be a little bitty hook there. Maybe we're starting to see weakness in uh, this is dry ships coming from around the world, other than like crude oil and bulk. This is this is just you know the dry index, so it just does with stuff that's not liquid related. So basically, that might be a leading indicator, but it's still too early to tell. So that's definitely some things I want to look at here. This is one of the longest videos I've done. I'm sorry. If you like the video, like it. And please leave comments. If you're seeing stuff that I'm not seeing, please put it out there. And so basically, as you can tell, I'm on the bullish side. And bottom line, I actually might take some earnings this week. I don't generally do that, but that's kind of the way I feel right here. Um, and with options, of course. And so basically, good luck all, and I will see you in the trading rooms. You can always leave a message if you want to join us in the trading room for come in and visit for one day or something like that. Okay, thanks a lot, and thanks for watching my videos.